Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about COSCO Shipping International Hong Kong Co. Limited Annual Report. COSCO Shipping International Hong Kong Co. Limited offers a diverse range of businesses and services to the shipping industry. The company operates through several segments, including coatings, marine equipment and spare parts, ship trading agency, insurance brokerage, intelligent shipping services, and general trading. The company's services include agency services for shipbuilding, trading, and bareboat chartering, as well as voyage repair service. It also sells and installs equipment and spare parts for vessels, including radio communication systems, satellite communications, and navigation systems. Additionally, COSCO Shipping International supplies marine materials and produces coatings products such as container, industrial heavy-duty anti-corrosion, and marine coatings. Furthermore, the company provides insurance and reinsurance intermediary services, offering professional insurance brokerage services that include risk assessment and analysis, designing insurance programs, discussing coverage, reviewing policies, and claims adjustment. It also offers green, low-carbon, and digital intelligent solutions for the full life cycle of the shipping industry. In addition to its core services, COSCO Shipping International trades in, stores, processes, and supplies asphalt and other products. The company's comprehensive range of businesses and services makes it a significant player in the global shipping industry. COSCO Shipping International Hong Kong Co. Limited market capitalization of $10 billion is materially smaller than most of its industry peers of roughly $58 billion. COSCO Shipping International Hong Kong Co. Limited trades at a higher price-to-earnings ratio of 12 times and a higher price-to-book ratio of 1.2 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 12% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The company have a dividend yield of 7.99%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, an increase in revenues from its coatings segment has been a significant contributor to growth. Additionally, the expansion of its ship trading agency segment has also led to increased revenues. Management fee income and commission income from various segments such as ship trading agency, insurance brokerage, and intelligent shipping services have also played a crucial role. Furthermore, the company's revenue growth can be attributed to the significant year-on-year increase in newbuilding deliveries and the growth in ship trading agency services due to an increase in commission income. These factors have collectively contributed to the company's revenue growth. On the other hand, the primary drivers of revenue decline include a decrease in revenue from its general trading segment and industrial heavy-duty anti-corrosion coatings. The continuous volatility in the shipping market and the negative impact of tariff trade wars have also led to a decline in revenues. These factors have had a significant impact on the company's revenue growth, highlighting the importance of adapting to changing market conditions. Net income and profit margins. A year-on-year analysis according to the extracted summaries, net income experienced a significant increase of 9% year-on-year. This upward trend is consistent with the overall improvement in profit margins across various segments. The gross profit margin reached an impressive 24%, marking a notable increase from previous levels. Additionally, profit before income tax from core business saw a substantial rise of 16%. These developments indicate a strong financial performance by the company. However, there appears to be a discrepancy on page 25, which suggests that net income actually decreased. This anomaly is likely an error and should be disregarded in favor of the more reliable information provided elsewhere. Despite this inconsistency, it is clear that certain segments have performed better than others. The segment profit before tax for insurance brokerage services and general trading increased, while supply of marine equipment and spare parts saw a decline. The company's financial performance indicates a positive trend in its operating cash flow. The data provided shows that the company has consistently generated more operating cash flow in recent years. For instance, in 2024, the company reported an operating cash flow of $1,819,000, which increased to $2,319,000 in 2025. This upward trend is further supported by the net operating cash flow and net cash generated from operating activities, both of which are positive. The figures on page 8 and 9 also confirm that the company has been able to generate a significant amount of cash from its operations. The inferred operating cash flow for 2025 is $141,000, which further reinforces the notion that the company's operating cash flow is increasing. Overall, these statistics suggest that the company is generating positive operating cash flow, indicating a strong financial position and ability to meet its obligations. The company's debt level has undergone significant changes. The increase in non-current bank deposits and lease liabilities indicates a substantial rise in the company's financial obligations. Specifically, non-current bank deposits surged from $0 to $23,753, while lease liabilities increased by 60% for both current and non-current liabilities. In terms of interest expenses, there has been a notable decrease. Corporate finance costs dropped from $34 to $20, representing a decline of 41%. Additionally, the total finance costs decreased from $1,213 to $1,634, indicating a reduction in overall interest expenses. These changes suggest that the company's financial situation is becoming more manageable, with lower debt levels and reduced interest expenses contributing to this improvement. The company's performance can be analyzed through its various business segments. On the positive side, the marine equipment segment has shown significant profitability, with an operating profit of $77,816 on page 8 and a total profit of $320,824 on page 9. The intelligent shipping services segment also performed well, generating an operating profit of $103,433 on page 8. Additionally, the others segment reported an operating profit of $139,088 on page 8. However, there are segments that have underperformed. The general trading segment incurred a significant operating loss of $56,177 on page 8. Furthermore, the ship trading segment also struggled with losses, reporting an operating loss of $28,062 on page 8 and a total loss of $23,428 on page 9. These poorly performing segments highlight areas where the company needs to focus its efforts to improve profitability. Management is expressing cautious optimism about the company's outlook. They acknowledge that foreign exchange rate fluctuations may impact profits, indicating a potential challenge on the horizon. However, they are taking proactive steps to mitigate this risk by closely monitoring and adjusting the debt portfolio. To ensure financial stability, management aims to boost finance income through investments in stable and conservative financial products. This strategy is designed to provide a steady stream of cash, reducing reliance on external funding sources. By doing so, the company will be better equipped to navigate any potential headwinds and maintain its financial health. The company has a history of paying dividends to its shareholders. In recent years, the company has paid interim dividends, with a payment of $0.33 per share in 2025 being made. Additionally, the company has proposed paying a final dividend of $0.19 per share and a special dividend of $0.10 per share. These payments demonstrate the company's commitment to returning value to its shareholders through dividends. The company's decision to pay dividends suggests that it is generating sufficient profits to distribute some of them back to its investors. This can be seen as a positive sign for shareholders, indicating that their investment is yielding returns in the form of dividend payments. imports. There are growing concerns about the potential for inventory buildup and supply chain disruptions in various industries. One key indicator of this issue is the significant increase in orders backlog, which has risen by a substantial 31.5% year-on-year to reach an all-time high. This surge in demand can lead to stockpiling and inventory buildup if not managed effectively. Furthermore, shipbuilding completions have also seen a notable increase of 11.4% year-on-year, which could exacerbate supply chain disruptions if not properly coordinated with the increased demand for goods. If left unmanaged, these factors may result in inefficiencies and potential bottlenecks within the supply chain, ultimately affecting businesses and consumers alike. That concludes the financial summary for COSCO Shipping International, Hong Kong Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.